Hey guys, it's Rodrigo with another episode of Asheville Real Estate News. Today, we're actually getting joined by Chase Hanks again. She was on our podcast last week, and we talked about what's going on in the mortgage market, how forbearance, deferments might affect things, and what they really mean. And we kind of talk a little bit about that again today, but more than anything, we kind of dig in on what's actually available out there. There is a lot of optimism as far as opportunities to, get a new loan and what to expect moving forward if you are a buyer and you're interested in buying, what to expect or what kind of things you can do to set yourself up for success. So hope you enjoy this episode. Would love to hear your thoughts. Hope you found this information that we've been putting out over this month as we navigate this coronavirus situation together helpful. And if you have, it really would mean the world to us if you share with a friend and just let people know that we're out here and that we're bringing this content for you. Thanks for tuning in. As always, enjoy the show and we'll see you guys on the next one. Well, welcome back, everybody. I'm here with Chase again, and we're going to be talking about mortgages again, a little bit of an update from last week. And if you didn't listen to that episode, again, go to the show notes. You'll be able to click through and have a little bit of a deeper dive. Chase, well, how are you? And welcome back to the show.
Hi, thank you. Thank you for having me, Rodrigo.
How's, we talked last week a little bit about kind of some of the terms like forbearance, deferment, and things to keep in mind. And I know that last show we put out, it was kind of, we sped up the production on it because there's a little bit of like all of the changes. So are there anything we need to keep in mind or anything that's changed since the last time we spoke last week?
There hasn't been a whole lot of updates on forbearance in general about how, about anything that might be changed from what's being put in place currently. Mm-hmm. As I mentioned, each servicer has their own set of circumstances and agreements that they're putting in place. There hasn't been anything more announced about deferment just yet, except FHA has a little bit of a different program than the rest of them. But 10 million people have applied for forbearance.
Wow.
And so there is concern about its abuse and people applying for it that don't necessarily need it. So my advice is just to make sure you know what you're entering into, understand your situation, and understand what's going to be expected of you. The only new update that I have that we didn't share last week was that currently the way the guidelines are written for conventional loans is that if you are in a forbearance agreement or enter into a forbearance agreement, then you will not be able to qualify for a mortgage until you have shown 12 months of on-time payments after the forbearance ends.
Wow.
So if your plans were to buy a home in the next, year to 2 years and you entered into one of those agreements, that is the current guidelines, and that is how it's going to work. So again, things are always subject to change, and as quickly as all these things happened, they can quickly change. So that's the biggest update. So the thing there is, if you need it, then absolutely it's there for you. Just know what you're getting into, and if you don't need it, then know what you're getting into, and it's going to be expected of you as well.
Do you have any feel, based on what you're reading or conversation you're having, about how many people know what they're getting into? Or is it a little bit of just, okay, I don't have to pay my mortgage this month and that's okay, and I'm just not going to think about the ripple effects?
Well, because there was no, because these were granted and the servicers were told to grant them with no evidence of hardship to be proven, then there's not really any statistics to show if somebody needs it or doesn't need it, because there was no documentation required. We do feel like that there was, probably more people that didn't necessarily need it that have applied for it than actually needed it. I don't know if there may be documentation to show hardship in the future, that you had. I don't think it would be retroactive, but there's no statistics because there was no hardship required.
Yeah, I know that. We buy houses here, and I know we've run into situations where people who've been facing foreclosure, they're kind of in a foreclosure situation because they got into some sort of like loan modification or forbearance agreement, didn't understand the ripple effects. And then, 6 months or a year later, they're like, well, my payment went up, or you're asking for all this money all of a sudden? Like, what happened? And so I guess when you've talked to people or your experience, do you think most people are doing this blindly and they're just like, or do you think there's like some actual like looking into it? Because I guess the only stories I know are people who are caught off guard by the the second wave of effects. And I don't know like how it would be otherwise. Like,
well, the message that was given, unfortunately, was a very loosely delivered message, and it was again, it was with the best of intentions to give people quick relief.
Yeah.
And so, like, I understand the intention behind it, but the unintended consequence is that there was a panic and people lost their jobs, and it was offered that it's going to be okay. Go ahead and you can skip your mortgage payments. However, I think the words deferment were even used in the beginning, and then that's not actually what happened.
And off the table.
I don't think that, I mean, there may be some people that are entering into it with certain intentions. I certainly heard of those cases, but I do think that it was more of it was a loosely delivered message, and it was something that was seen as very easy to obtain. And if you don't read a lot of the fine print, or you don't understand exactly what's going to be expected of you, or you were just in the moment trying to get some, relief. So I would like to think that it's not, everybody wouldn't do it totally intentionally. However, I think it's more people just not understanding, because I have been trying to get the message out, speaking to a lot of my real estate agents that are also on commission income and may have lost contracts because they can't sell their houses. I mean, because they can't let people in their houses, that kind of thing. And I've actually talked several of them out of going into forbearance because they now understand the consequences.
Yeah.
So it's a big message that I think was missed in the delivery. And that's why so many of us, if you are on social media, so many loan originators have been trying to get the word out, because it was even the video that the CFPB put out, it was very loosely delivered as to what the actual program would look like.
Well, and we dive into that a lot more detail in our previous episode. So it feels like there's a big rain cloud over the mortgage industry, or real estate and lending. And I guess, is that accurate? Is there a ray of sunlight we can like chase, or what's actually happening?
Well, one of the things that our CEO likes to fill us up with is one of the things is what you focus on expands. And if you focus on the negative, then the negative is going to be what is in your focus. If you focus on the positive, then that's what's going to shine through. So there are a lot of changes that are happening, and you see a lot of lenders that have tightened up restrictions. Overall, that's going to be to the betterment of all of us, because if we have home values drop, and if we have unemployment that is sustained, if we have all those things, then it is going to be bad for our economic industry. So some of the tightening and things, while it seems very unfortunate, and it has hurt some people that may have been qualifying that don't, it's really to protect the whole industry overall, because we don't want to go back to another 2008 or go back to another time period where we have significant foreclosures and things like that. So the restrictions have tightened. However, there is still numerous loans available. So there are options available, things like FHA. Well, with FHA, you used to be able to get a 50% debt to income ratio. Well, now you can go up to 45%. The minimum credit score used to be 580. Well, now you can go to 640. And keep in mind, like I said, that on the last episode, is that every lender can take the guidelines and make them more strict based on their own risk tolerance, or they can't loosen them, but they can make them more strict. So I always tell people, if you try one lender and it doesn't work, that doesn't mean that there's not another option for you. There are potentially other lenders that might be in a better liquidity position based on their portfolio, that they have not tightened the restrictions quite as much. So my biggest advice to people is to speak with, your lender, whoever you are talking to get pre-qualified or to refinance or whatever. But if you're not getting an answer that you like for some reason, or you're not qualifying, then don't hesitate to reach out to, another lender that may be able to assist you based on their own level of liquidity and their ability to, their own portfolio and whether or not they're able to continue to lend money. USDA is still a program. That's a wonderful 100% financing program. Is still available and with very minimal changes. FHA still available, VA still available, conventional loans up to $500,000 purchase price, loan amount still available, $510,400 actually, but that's the conventional loan limit. So lots of still opportunities. So you can't, with lending, everybody wants to paint a broad stroke and think it applies to everybody's situation, but lending is actually a very highly customized approach. So when people talk about, well, my neighbor got this interest rate or my neighbor got this program, well, it's so highly customized to your income, your down payment source, your credit score, your income sources. It's so highly customized that you can't paint a broad stroke. So I really want to let people know that there are still loans available. There are still a lot of great opportunities out there. I'm excited about this era that we're getting ready to go into because our locals are going to be able to buy houses again.
Well, I was going to ask you if there's something you're specifically like that's been changing over this time that's actually given you excitement. And so you're excited about, I guess, prices being a little bit more stable or staying flatlining a little bit more? Or?
Yeah, well, or you're just seeing not as competitive bids in those lower price ranges. So I've taken a lot of contracts in the last week for people that have been looking for a solid year, but now because it's turned into a little bit more of a buyer's market, and these are all locals that are able to capitalize on opportunities that have come out of this because they're not competing against somebody from out of town that's buying it as a second home or buying it as investment property. Some of that may have tapered off a little bit. So it's an exciting time, I think, for especially our locals that may have been wanting to buy and want to get out there and start looking for homes.
Well, on that note, let's say I didn't think there was a lot of opportunity to qualify right now. And it was just like, man, it seems crazy. I'm going to kind of put a pause. I listened to the conversation we're having right now and I'm like, okay, I'm going to go dip my toe in the water. What do I need to keep in mind if I'm a new prospective borrower? Is there anything I should be doing that maybe I wouldn't have been doing otherwise? Like, how do I line myself up for success here?
That's a great question, and I'm glad you brought it up. So the biggest thing is to know, where you're going to see a lot of questions more scrutinized right now in the underwriting process is what is your current income source? If you have been furloughed or if you have been laid off temporarily, then you do have to return to your job before we can use that income. So if you were a full-time salaried person, a full-time hourly or a salaried employee, then we just have to wait until your job has resumed and we get your first paycheck. So that is, hopefully not too far off for a lot of people. Right. And then as far as if you have variable income, that's okay, but we do have to average it with what your income was year to date, because we do have to take into account for the time that there was not income. And that is if you have variable income such as, seasonal income, production income, those any part-time income, anything that's not full-time salary or hourly. But just be prepared and be very honest. So the biggest thing is that don't think that because the question wasn't asked of you, that it's not going to come up during the underwriting process. So save yourself time for spending money on inspections, appraisals. Don't waste your real estate agent's time. Just be honest with what your situation is so that, a good loan originator is going to be an advisor to you and help you through that. That's the biggest thing, is just being honest and being very, very upfront about your situation.
Yeah, I'm assuming, I don't know this, but you guys, like as a loan originator, any loan originators come in beside you to support you in this process, right? They're not looking to keep you from buying a house, right? They're going to do their put your cards on the table and they're going to help you play the best hand, but they need to know what your cards are, right? Right.
Absolutely. Because it will come up during the process.
Yeah.
And what we're having to do now is verify income up from the not only we, within 10 days of closing, now we have to verify it within 5 days of closing to make sure you're still employed. And then we have to verify it again within 48 hours of closing.
Wow.
And this is not verifying it with you, it's verifying it with your employer. So it's, it's going to come up, and it's not in your best interest to be dishonest because you don't want to waste your time or waste your money. Just be very upfront, and then we can advise you and tell you, okay, well, when this happens, you'll be eligible to do this. When this happens, you'll be eligible to do this. So that would be my biggest advice to people. And there's still a ton of people though that are working, that have great income. Their income hasn't been affected. They have great jobs, and now, since we maybe aren't seeing the market as competitive in certain price ranges, it's an opportune time to be looking.
Yeah, no, absolutely. Well, I'm glad that you shared some of that optimism with us, because I know personally, like definitely a lot of the things I've been reading, I was like, man, it's going to be hard for anybody to get a loan. But there's, again, it just shows the value of aligning yourself with people who know, specific industries inside and out, of course.
Absolutely. I think that, we have a lot of change. A lot of changes happen very quickly. A lot of change will continue to happen. But the stuff that's put in place right now is designed to protect the markets, designed to protect the overall industry, so that, hopefully we don't have a longer time period or of negativity or things that may happen, so that we can pull out of this much more quickly. So while it may be inconvenient and may be a little bit more difficult in the short term, I do feel like based on all that's happened, long term, it's to all of our people in the industry's benefit, as well as homeowners.
Awesome. Well, as we wrap up here, I've been asking everybody, or I'm starting to ask everybody, not on any of the shows that have come out yet, but do you have a good work from home story that's worth sharing?
Good work from home
Something story. Like for me, one of mine was like, last week I was making fun of myself because I was having issues. Like my wife cut my hair, and I was like still wearing a hat because I thought it came out terrible. And I'm like, as you can see today, I've overcoming that fear a little bit. The other thing, I've been able to like ride bikes with my son a lot, and that's been a lot of fun. And, hadn't been doing that as much before. So it's just some of those, like, I don't know, ripple effects that I've never even considered about, being stuck and working from home.
Yeah, I think, as far as working from home, for me, it's been a opportunity to have a lot more mealtime at home, not eating on the go, a lot more cooking, a lot more planning, those types of things. But also I've been able to be a lot more focused because you're not driving from meeting to meeting. You're not, spending a lot of time in the car driving around or sitting in traffic and those kind of things. So it's been able to allow you to be a little bit more efficient and more timely with some things. However, I do, I really, I miss seeing my team each day. I miss that connection. We're really close at Movement Mortgage. So I miss seeing, our other loan officers and our other team members. We do the Zoom calls, and that's getting you by. But I miss going to the closings and seeing my clients. That's been a hard part of it, but we've adapted really well. And it's been nice to be able to wear your sweats a lot.
That's true. For sure. Well,
I don't have a great story though, because I don't have kids or anything. So I don't have some great enlightening story for you.
No, but those are good, right? It's just, it's interesting, the different things that, I don't know, I guess are coming to the surface during this time of, like, I don't know, cooking. Like my mom said the same thing. She's like, I've been cooking way more than I have in a long time. So either way, well, Chase, thanks so much for joining us. Quick reminder, if somebody's looking for your contact information or to have any of these questions, or maybe they're like, I am going to start getting this process started. How does somebody reach out to you and connect with you?
Sure. You can actually just Google Chase Hanks and Movement Mortgage, and it'll come right up. Or my website is movement.com/chase.hanks, but sometimes just Googling Chase Hanks it's easier. And if everything should pull up that way on social media, everything's just under my really masculine name.
Yeah, and we will have all that information in the show notes as well. So,
awesome.
Well, Chase, thanks so much for taking some time with us today. I hope you have a great rest of your day, and talk to you soon.
Thanks. Good to see you.
You too. Bye-bye.